And the rally continues. 2 weeks ago today, I told you on January 9th that we were going to bottom the following week, and then about that more in great length and detail, and I predicted the same thing on the 10th. But bottom the following week, there, as we kicked off earnings season and got the inflation data, laid out my case why I thought on the 9th and the 10th there, thought we would bottom the next week and go down, hit and fill the gap and likely bounce off the trend line on the S&P 500 from the 2023 low. That's exactly what happened. I told you we were going to go up and move to new highs and move towards the trend lines. I've been talking about on the weekly chart, the rising wedge in the daily, or the possible channel that's forming. Things played out according to plan. Now, again, I continue to be bullish, but at some point we're going to get a pullback with a short-term price fluctuation, back testing the bull flag and then resuming the advance. That's probably the way it's going to play out, but the rally is continuing today. The bottom that I predicted took place right after I predicted that. It took place on the 13th of January, and we rallied that week. We've rallied this week. We're going higher, but at some point we will get a pullback. The main movement is higher. At some point we'll get a short-term price fluctuation that will take us back to get a pullback, likely a wave 2, continue the advance. The Dow was up 408 points, up nearly 1%, just under 1%. The S&P was up just over 0.5%, 32 points. Getting another close above 6,100 at 61.18, almost 19 rounding up. The Nasdaq was up 0.22%. The Russell was up just under 0.5%. The VIX was down just over 0.5% to close just above 15. So we're getting the rally on hopes that for rate cuts, well, we're going to see the Fed throw cold water on that because they're going to make another monetary policy mistake next week. They should be slashing rates right now because we're about to move into recession. Well, we're getting this rally on hopes of the rate cuts and hopes of the tax cuts and continuation of the election rally, as I predicted would happen. Again, a pullback at some point, and maybe the Fed throws cold water on this with Fed meeting next week or whatever, but going to continue higher to complete the blow-off top. So kind of interesting. The market's rallying on this right now. I expect the Fed will throw cold water on that, and I expect them to pause, and that's what markets and Fed fund futures are expecting. And the Fed, they went from 4 cuts down to 2 cuts. They're only going to get 2 cuts in 2025. That's not going to happen. And the betting markets are telling us they're only going to get maybe 1 cut, and sometimes it's none, and sometimes it's 2. Been hovering around 1 quite a bit. Changes every day. Recession, the Fed's going to start doing jumbo cuts. Recession that they're telling us is not going to happen. And Powell said that on December 18th. It's clear that we've avoided a recession. The Dow's having another awesome week. Again, I predicted that bottom on the Dow and the Russell. And again, I told you they would likely the S&P to bounce off that 2023 trend line. Played out beautifully. The Dow continues in strength, so we'll be watching what happens here. Showing this trend line, we had stalled at it yesterday, but continuing the rally. Diversions tipped us off to the bottom. See if the Dow makes new highs. If the Dow makes new highs and it diverges with the transports, that's going to mark the next peak for the Dow. It does in fact happen. Beautiful diversions, negative diversions, allowed us to call the sell-off, and then the bullish diversions allowed us to call the bottom correctly, and that's why I predicted that week of the CPI, which it did in fact happen. Same thing for the Russell, that divergence in late November. Told you about that. That produced a sell-off. The bullish diversions produced the bottom, and I told you we'd likely see the Russell gap down to that 200 and the trend line, and see the S&P fill the gap and hit the trend line. And I thought that the Russell and the S&P would both bounce off of their trend lines from the 2023 lows, and that's exactly what happened. I believe the Russell has peaked, and I believe forming this divergence. The S&P is already hitting new highs. I believe the Russell has already peaked after dropping nearly 12.5%. Help me call the bottom. I don't think it's going to move to new high. That's what usually happens at tops. Please support the channel. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please take a moment to partner with me and support the channel today. I just put it all out there. Just ask that you partner with me. I got people contact me all the time wanting to sponsor the channel. And again, I turn all those offers down because I don't want to sell you a bunch of stuff. I don't think you're here to have me sell you stuff. I think you're here to look at the charts. Just ask that you partner with me and just do what you can to help out, support the channel. If you could do that today, I would really, really appreciate it. It would be really encouraging to hear from you. Thank you for your consideration for that. Just follow the link below to take you to a secured site and you can donate any amount you want. Thank you. The VIX, back below the 50-period moving average of 50, dropped back below the 200. That buys us a little bit more time. The VIX topped before the S&P bottomed, as I warned you. Often the case. And again, these signals on the VIX predicted the rally that we now have. So we'll be continuing to monitor the VIX. The S&P is likely going higher, but it'll probably pull back and drop back below 6,100 at some point, maybe for a back test of our bull flag. That's likely going to be the case. Now, again, we could still go higher. We got a wide range bar today. Could get a candle of indecision, a doji or a spinning top or something tomorrow, and get an evening star reversal. That's possible here on the daily chart. Give us some kind of pullback. Again, we've gone, really parabolic with these gaps. Short term here, again, I'll be watching them. We'll probably go higher than this peak if we do end up forming of indecision tomorrow or some type of reversal bar. But if we do go a little bit higher, again, going to be watching this throwback to a back test here to fill this gap at 59.38, which is the gap fill of the breakout, which we had the bull flag the day before Inauguration Day, which is a continuation of the presidential election rally. The Osmo Oscillator in positive territory, the MACD in positive territory. So again, at some point we're going to get a pullback, but like I said, the bottom and the rally and the new all-time highs and all of it that I predicted that we would get now happened. At some point you're going to get a pullback. Shorter-term price fluctuations are harder to call, but I'll be looking at the Fibonacci's are currently with the high and the low here. That could change if we continue to go higher. But again, I'll be watching this gap fill at 59.38. If we did go higher, it would raise our 61.8 Fibonacci a little bit higher and closer to it, which would be an area of interest to me, the 61.8 Fibonacci and the back test of this trend line. So if we go higher and we get like a doji tomorrow, or we get a spinning top or something and then start selling off a wide range bar come Monday, have a possible evening star. Just a short-term peak. I said I'm bullish, predicted a bottom, but at some point we're going to get a pullback. Is that here? Maybe. Is that higher? We'll see. I remain bullish, and again, I think I correctly called the bottom here at the gap fill and the 2023 trend line, the gap fill from the presidential election rally. So the president's comments today sparked the rally to continue today. And we had a candle of indecision yesterday on the S&P 500 and the Dow, but we still went higher. And again, the S&P rose another 0.5% here. And again, we're at new all-time highs. We reached them yesterday, couldn't close there. We turned back down. Today we closed above that level, 6,099, the peak over here from our December high. I told you we were going to exceed that level. And here it is. Look, over here, again, we are at the 50-period horizontal support. We have bullish divergences on our 60-minute charts. And I told you we are going to bounce off this 50-period moving average. It was telling us we were going to get an election rally or a rally with the Fed or both, which, again, we got it, the election rally and then the Fed. And then right after the Fed, we peaked out right after that. We pulled back to gap support and then continued on to the December high. And that's formed this head and shoulders, which I told you was a fake out pattern, because I told you I believe that this was an ABC structure. And I told you I thought we'd come back and fill this gap. And I told you that before it happened. And as we were going down, signals, again, we had the signals turn bearish right at the top there on our 60-minute charts with this little divergence. That's when the Dow turned bearish as well in the daily time frame, formed the triangle. We ended up getting the downward resolution with the triangle with the Fed lowering the amount of, reducing the amount of rate cuts, 2025, and it evolved into the bull flag. Bitcoin's doing the exact same thing. But I told you, again, signals remain bearish. I told you we were likely going to bounce off this 57.83 gap fill area, and the trend line going back to 2023. In the daily, that's really forming this channel right here in the more recent price action from our August low right here. Let me just bring it up here so you can see it. But the bottom and the breakout and the bounce off of the trend line, the bottom, the breakout, the bounce, warned you was going to happen. And look at all these gaps now. At some point, we're going to pull back, okay? And again, at the main movement is we're going higher. Okay, the short-term price fluctuations sometimes can be tricky. Oh, we got really good signals at the top over here, at the bottom right here on our 60-minute charts. A lot of those signals calling these tops and bottoms along the way did a very, very good job. I think that we're likely going to have these smaller subwaves and probably get a throwback to backtest the breakout of the bull flag. These other gaps may get filled later. I told you if we backtested immediately, we could throw back into the pattern. But I told you if we go higher, and because we've moved above this previous peak, it's more likely we're going to backtest the breakout of the bull flag and then head higher. Now I have two trend lines I'm watching. This red one is from the July high right here. And that is our upper boundary of our rising wedge. And I'll show you that Elliott Wave count in a moment. But here we have this minor wave 5. I told you I thought minor wave 4 was completing with this. And that's why I told you I thought that the pattern was a fake out, head and shoulders. But I do think we're going to get this 5-leg push higher. This count would take us up to this upper boundary parallel to the lower boundary. And I drew this in the day right there when we were filling the gap. And I warned you that was taking place that week. So if we get a pullback, you can get a wave 2, an extended wave 3, maybe hit this trend line, and then pull back and get wave 4 and 5 if we go beyond the red trend line. That's the rising wedge. If it drags out more, we can still hit the red trend line, but it would go on longer in all likelihood. And again, a date and a number are not my target levels. The trend lines are my target levels. And depending on when we come into contact with them, I can tell you where the numbers are right now. But you got to remember, we went nowhere for about 12 weeks. 12 weeks. We've gone nowhere since the election rally. I think we have a continuation of the election rally, as I predicted would happen, which is happening. But this buys us more time to go to our trend lines. And as we lines in the weekly time frame, the upper boundary of the channel I've been talking about, and just more time to reach that level now. And because we didn't reach it immediately over the last 12 weeks, we had these rallies in November and December that fell short of my target levels. Well, and then we've had the sell-off now from early December into mid-January, and that takes us the target levels higher. So I've drawn in these trend lines, and again, let me just show you this right here on the wedge pattern. Here it is. Here's the 5-leg push higher, which again, Elliott Wave is speculation that this is likely the case right here. I think we're in this minor wave 5, and we're getting these smaller subwaves in minor wave 5 that I think could complete up here if we have the channel. If we fall short of it and we stall at the red trend line, it may take a little bit longer, but it would stall at that trend line rather than this one. Let's take a look at that. So here's the channel, and again, I believe we have these from the intermediate wave 4 right here. I believe that we have these 5 minor waves, 1, 2, 3, 4, and that's why I told you I thought that head and shoulders would fill, and I think we're getting minor wave 5, and then I think that will complete the blow off top. Remain bullish, but I think we're going to top at one of these trend lines in all likelihood, and then I think we're going to reverse hard. Now, however long that takes, we'll see. Told you I thought we'd top in December, January, or the first quarter if we didn't top in those, but I told you as we were declining that I thought this was wave 4, so even though correctly called the December top, I told you I no longer thought it was the top, and I thought we would move to new highs. So we hadn't reached my objective target yet in the weekly time frame. So here is the 5-leg count with the channel. That means we go higher than the red line, which is the peak there in July, the upper boundary of a rising wedge. So let's look at the rising wedge now. This in your mind, this potential 5-leg push higher here. Now take a look at my rising wedge scenario. Again, this is the daily chart. Again, I told you we're going to bounce off this 2023 trend line. Right here, going back to 2023, again, connected to this low right here in the summer. Told you we were likely going to bounce off that level, and that's why I didn't think the head and shoulders was going to play out. I thought we would go higher up to this upper boundary of the rising wedge. Intersects with the upper channel line in the weekly time frame that I've talked about. Here, again, the same thing. I think we can back test the bull flag pattern, and then I think we can go higher and maybe towards the July trend line and bounce or reverse off of it or come just shy of it and then hit it again and again Will be the rising wedge scenario. Same thing, same count. The minor wave 5 in those smaller subwaves. But this is where I think we would be headed towards this upper boundary. It was this trend line from the July peak that called the the November high and the December high there before we got the December sell-off down to the January low. Now this rising wedge is in the larger channel in the weekly time frame. So again, I'm watching these two trend lines, this red one from the July peak and the channel that I showed you a moment ago, which is just a little bit higher. We're going to be watching those trend lines closely. Again, as I've said, I think the MACD is eventually going to be up in this area. Just now moved back into positive territory here this week. And again, I do believe we're going to end up going higher here, but then eventually see the MACD roll over or even form a divergence in the more recent price action there and roll over and end up diverging with the peak over here. And probably, again, this larger divergence with these previous peaks developing that originally reached the extreme there with the July peak, and something very similar to this. The only thing is this just gave us a pullback. This will likely complete the blow off top and give us a reversal. I'm going to show you the 60-minute chart, and I'm going to blow up this area right here so you can see it on the 60-minute chart. And again, it's possible that we are coming to a conclusion with the wave 1. I'm bullish. The bottom, told you I thought wave 4 completed, got that right, got the bottom right, got the rally right, got the breakout right, got the new all-time highs right, but I told you at some point we're going to pull back. And I told you again, whether we go up and make a new high and pull back or whether we did it before we made a new high, it can play out either way. At some point we're going to get a pullback, and again, then the advance will resume. Look at this up close. Before I do that, let me show you that larger channel. Here it is on the daily chart. Here's that 2023 trend line. Again, we just slightly violated it to fill the gap and then moved higher. Again, this is where I think we're headed here. You see the same thing on the weekly. And if we zoom out, here's the larger Elliott Wave count here. And again, this primary wave 5 here with the intermediate waves 1 and 2 and 3 and 4. And then now the intermediate wave 5 that's going to complete primary wave 5, but it's unfolding in 5 minor waves, 1, 2, 3, 4, and now 5 up in here somewhere, or depending on how long we take to get to that trend line. But I think you're probably going to go to about the 63.42 area or so, maybe closer to 6,400 if we take our time reaching it. As I've said, again, a number is not my target. The trend line is my target, but they intersect the upper boundary of this rising wedge. This is a rising wedge we looked at on the daily chart. They intersect up here, so again, that's likely where we're headed. And then I think it'll be followed by a 20% crash. The Fed will panic and will end the bear market. So the ending of the bull market with the blow-off top completing, the blow-off top continuing to be underway here. I don't think it's done. And once it is done, I think we'll usher in the bear market, and we'll have completed this multiple point diversion. So that's where we are, this rising wedge in the larger channel, and I think we'll stall somewhere in that area, or maybe even overthrow the trend line a little bit. We'll see. I remain bullish in the weekly time frame, but I do think that a top is going to complete in the not too distant future. I think you got a good chance of it here in the first quarter. I told you if we didn't see it in December, and I told you I didn't think the December top was it, even though I said it could be before. Once we cut it in and we sold off, I told you I thought it was wave 4, a larger wave 4 rather than the smaller triangle. And then during the sell-off, I told you we were likely going to go make new highs. That's what I believed, and now that is true, has happened. But I think that we've got that minor wave 5 under construction here. So I told you I didn't think the December top was it during the sell-off. As the sell-off continued on into mid-January, just before we just broke out there, full flag right before the inauguration, day before the inauguration day, buys us more time. So again, this is going to drag out into the first quarter here somewhere. This is where I think we're going. Again, the trend line's a target, not a number. See if we try to reach it here during the first quarter. I remain bullish as we get this push higher, the breakout of the bull flag. I think we'll at some point get a pullback here. Again, we could be completing this first subwave very soon and come back and back test and maybe fill a couple of these gaps. We'll be watching, or fill the gap from the breakout. We'll be watching that from the breakout that we had the day before inauguration day, the holiday, and then the day after the rally continued. Look at this on the 60-minute chart. Told you we reached extremes with the RSI, but again, still might form a little divergence. We are now getting that. These bullish divergences that tipped us off to a bottom forming and the gap fill over here. I told you we had the over here, we had the presidential election. Let me just zoom out a little bit more so you can see it. We had the bullish divergence here at the 50 period in the daily, and I told you again that was likely going to give us a rally surrounding the presidential election and the Fed meeting. That's exactly what happened. This gap was created with the presidential election rally. That's the gap that we just filled here, and I told you we were likely going to bottom there because we, in filling that gap, would be reaching the 2023 trend line. So again, I think we've got these smaller waves here that are forming, and it moved on me. Hang on. There it is. These smaller waves, I think, are forming this first subwave up in minor wave 5. And I think we're going to pull back, and we're going to see probably a back test or at least a throwback. And again, we might come back. Here's the breakout right here on the 17th, the day before Inauguration Day. And again, as we had the election rally over here, and we predicted that bottom correctly as well, I told you, again, this is likely going to be a continuation of that. We've got our first subwave here, a minor wave 5, and again, probably not done yet, but I think it will finish, and we'll come back and we'll test this level. And then we'll be watching, does some kind of channel develop or not, rising wedge or some kind of that we can look at. But again, this is what I think is going to happen. I think you've got your first subwave here. I think you'll get another subwave back over here or at the trend line. Maybe it takes a little bit longer, maybe shorter, who knows. We're getting, again, the 50 back above the 200 period moving average. So again, even if we pull back, that's a positive sign that we're going to go higher. So again, I think we'll likely back test or get a throwback towards it rather than trying to come back and fill the gap down here or move into the trading range of the bull flag pattern. So I think we're likely going to see a back test. This negative divergence now developing is likely going to allow that to play out here. We move towards a Fed meeting next week. And remember, a lot of earnings next week. We've got the Fed, a hawkish cut out of the Fed last time, and the Fed is about to make another monetary policy mistake by pausing. Market could give the Fed a sell-off of disapproval. And remember, we're seeing the 10-year yield. This rally happened because the 10-year yield pulled back. Now it's trying to rally back up. That was another reason why I called this bottom correctly, because that 10-year yield. If we get a pullback, again, the MACD is now in positive territory, got momentum bullish now, and again, all the things I predicted that would happen have now happened. Bottom, the bounce, the breakout, the new all-time highs. So again, at some point, you'll see a pullback. What a beautiful thing. And as I said, Bitcoin's doing the exact same thing as the S&P 500. Went up, made a new high right here, turned down off of those levels. S&P did that yesterday, but it closed at a new high. We're likely going to turn off those levels. And again, both of them are likely going to get a back test or a throwback of the bull flag patterns, maybe to the trend line here with Bitcoin. But again, pretty remarkable. They both form the head and shoulders. They both now have potential double tops that, and I think are more fake patterns that will give us the bull flag breakout and carry us to new highs with Bitcoin and the S&P 500. S&P has been following Bitcoin, which is pretty amazing. Positive correlation. And the bullish divergence on the MACD, I think both of them will form these large, massive negative divergences on the MACDs. We already had the one over here give us this sell-off. And again, on the RSI as well, I think we'll end up forming a massive divergence here that will mark a peak of the final blow-off top with Bitcoin and with the S&P 500. Quickly going back to the other chart here of the S&P 60-minute chart here again. If we turn back and drop back below 6,100 with the diversions, then we'll be watching these gaps. And again, you've got several of them here, but I think this gap down here, 59.38, which is the breakout gap from the 17th. We broke out on the 17th. That was the day before Inauguration Day, which was a holiday on Friday the 17th. And I think that that gap, if we were to throw back into it, we could fill the gap at 59.38 and get a back test. Whoops, sorry about that. And get a back test. Once this move is done, I think we'll fill some of these gaps. But like I said, down here, I don't think we're going to fill this gap down here at 58.43. Come up and fill these gaps, these previous gaps over here, that I had talked about. The reason why I thought we were going to go to new all-time highs. So we'll be watching this divergence. We start to turn lower and maybe surrounding the Fed continuing to take a hawkish stance, earnings or whatever the catalyst may be. We'll be watching to see if we get a throwback or reach the trend line and get a back test. And if we do reach the trend line, I'll be watching 59.38, which is the gap fill down here from the breakout point of bull flag the day before the inauguration day, which again, as I've said, I believe it is a continuation now, a continuation of the presidential election rally over here. I think, and again, that kicks off with inauguration day that will carry us higher. Then we're going to complete a blow off top. One of the reasons why I predicted the rally was because we were about to get that inflation data as we were slamming up into the resistance zone and just overthrowing this trend line. And I told you we could turn off of it, and that could create a rebound rally at that 2023 trend line and the gap fill from the presidential election. Now we're turning back up. We're up 0.85% today on the 10-year yield as we go into the Fed meeting next week. And as what I'm watching is, did we top here and we end up getting a lower high with this next rally, or do we eventually try to go up and get a double top? I don't think we go much higher than the 5% area, but do we still try to go up here and test this level? If we have peaked, even if we start to see the inflation data tick up and freak the market out, it could just still be counter trends, but it could also end up being a double top pattern up here, something I'm paying very close attention to. I said that could eventually, that does happen that way, or if we don't see it that way, but we see inflation reports tick back up like the CPI and PCE data and so forth, there can be concerns about inflation, and that could give us a market that the Fed is not listening, they're not going to cut, inflation's coming back, and the market could just start to sell off. The market believes that the rate cuts are bullish, but the Fed will eventually cut. It's going to be for the wrong reason that they're expecting, and that is going to get a recession. But this is starting to tick back up. We'll be watching the 10-year yield as we go into the Fed meeting next week. Nasdaq's still struggling at this trend line right here. Again, we've broken out of a bull flag. Is what I'm going to be watching is, will Nasdaq eventually make new highs, or does it go sideways like it did in 2022 and end up diverging with the S&P 500? We got that topping toe in the monthly time frame. I'm still paying attention to that. We are recovering, but again, will we make new highs and void out that topping toe we got in the monthly time frame? That's why I'm paying attention to that, is because sometimes, if you look at history, sometimes Nasdaq and the S&P, they diverge from one another. We got this bullish cross on the MACD just like on the S&P 500. So again, we'll be watching. Do we end up confirming a lower high, or do we go to new highs? And we'll be watching what happens here. Do we end up getting a back test of the bull flag, and can we make new highs? Eventually, do we see rotation out of tech, and possibly that divergence? I think the jury is still out on that, but we're rallying back up. I predicted a bottom, but I'm uncertain whether we're going to be able to make new highs. I've drawn this channel right here if we do, and again, we have the trend lines in the weekly time frame. It's a topping tail I've been talking about in the monthly time frame. Again, it has to, in order to mean anything, it has to be confirmed and get a follow through. And we went lower at the beginning of the month, but we're rebounding back up. I talked about that possibility, either if we resume the advance or go sideways, like we did in 2020, late 2021 and early 2022 for the Nasdaq. S&P went and made new highs. It didn't. So we'll be watching that. I don't think the Russell's going to make new highs. I do believe the Russell's peak, but watching this topping tail in the monthly time frame here on the Nasdaq 100. The Nasdaq lagged. Again, it's not moving above the previous peak here, and it was down. It was up only 0.22%, lagging the S&P, lagging the Dow. Again, I'll be watching. If we do push higher, do we go up here and move to a new high above this area right here? And we've got this gap fill. My line's a little crooked there, but the gap fills right there. We'll be watching. We did fill this gap over here on the Nasdaq. Here's the bull flag. And then we'll be watching, do we go up here and go higher and then turn, or do we make a new high and turn, or do we make a lower high right here and now without moving above this peak? I'll be watching, does NASDAQ make a new high above this high right here? And then if it does, do we try to exceed this level over here? Got the possible throwback or back test if we do have a bull flag here that's going to take us higher. We'll be watching that. Divergence also developing here. If NASDAQ can push above this peak it could develop, or we can get a lower high. We'll be watching to see how it unfolds. These divergences over here tipped us off to the mid-December high. Bullish divergence here tipped us off to the bottom, as we talked about, and again, 2023 trend line on the S&P and all the other things I talked about, greed index and the bullish divergence and all the rest of it. Signals were all correct. But again, we had the same bullish divergences here. Never did fill that election gap rally. We'll likely do that later. Again, we're still in this kind of trading range, so we're going to be watching to see if we can make a new high or not. The S&P is, but the Nasdaq so far is not. Watch this peak. Do we exceed it? And if we do we exceed the high over here? Again, it's likely going to be, we're going to get a throwback at some point, and it's looking like that's going to be with the Fed as we close out this week and then move on into next week. Wednesday is a Fed meeting.